Hi there, Mike Brady with Generosity Wealth Management here in Boulder, Colorado. And the question is, where do we go from here? And we're getting a lot of conflicting information. In the last month or so, we've had huge volatility. We're basically in a trading range. We have been for the last 3 or 4 weeks, but it's been a trading range that's extremely volatile. And we're talking 0.5% to 1% up over a few days, and then boom, a negative 2, 3, 4%. We've seen the correlations between the European market and the U.S. and Asia very high. And as we look back, 5, 10, 20 years, the correlations for the international markets have become increasingly correlated. We're a global market now, and so what happens in Europe is irritatingly affecting our situation here today. We're also seeing a lot of emotions, and we're seeing a lot of news-driven markets, which just absolutely irritate the heck out of me. We as a market, as investors, keep waiting for some bailout, some news from the government, and that's just absolutely distorting things. Philosophically, I'm going to go off on a slight tangent here. I understand that government will always be a part of our free market system. It's never been 100% free. However, just the interaction that we're having now, it's like this 900-pound gorilla in the room that makes things very difficult. Kind of on the flip side, as we're looking at some of the positive things, I mean, we've got almost all of the S&P 500 have done their earnings for the second quarter, and year-over-year growth is about 12% over the previous year. And if you take out some of the financials, we're talking almost 20% net earnings growth. You've got net margins back in 2008. That's efficiency of almost 6%. Now we're going all the way up to 9.27. So when you look at companies, they have huge balance sheets too, by the way. Apple's got $76 billion in cash. I mean, a lot of these companies have cash on the sidelines. They have been very efficient. Unfortunately, the negative effect of that is they have trimmed their workforces. But as you're looking at some of the larger companies, the S&P 500, they've become very efficient over the last 3-4 years. They've kind of trimmed, as they see it, the fat, and they're sitting on huge sums of investable assets that they can redeploy at some point. They're just not redeploying it right now. And so that's very frustrating. I am long-term, when I say long-term, we're talking 3 to 5 years bullish on the market. I think that we're set up for that. But on the flip side, I mean, I hear all the arguments about how Europe is imploding, which it is, how that's going to drag our financial system down. What's going to happen with the EU and the euro is anybody's guess. And so there's a lot of reasons right now where it could go either way. I mean, I'm just going to sit here and admit that. What I'm doing in my portfolios is I am decreasing some of the equity positions that I have. I'm absolutely going to continue to have some, but from the very conservative to the very aggressive models that I have for clients, I am decreasing the equity positions. Most recently, like in the next week or two, we're going to hear what, if anything, Bernanke and the Fed is going to do. They've been talking a little bit about this twist where they buy a bunch of medium to long duration treasuries to shore up, to keep interest rates low. So there's a lot of things in play, but I'm just telling you that right now I'm going to decrease my equity position. Market could go up. Once again, I'm going to be very happy 3 to 5 years from now. But right now, it's very it's kind of hard to analyze which way it's going to go. And in that particular case, are you getting the return for the risk that you're taking? And right now, I'm questioning that. So I'm going to reduce some of my equity positions and decrease the percentage. Of course, still stay in the game though. Anyway, Mike Brady, Generosity Wealth Management, here in Boulder, Colorado. My phone number 303-747-6455. I have a new blog on my website, www.generositywealth.com, and I highly encourage you to go there and look at it. I'm going to have archives going back a number of years, and I think it hopefully will be, I think it'll be very helpful and very interesting as you go back maybe 2 years of weekly or every other week videos like this or other things that I have found interesting in analysis, so you can go and get a flavor for what I've been talking about for the last couple of years. So I am taking new clients. I would love it if you gave me a call or if you pass this video on to someone who might be interested in a comprehensive wealth management firm, Generosity Wealth Management. That's me. So anyway, you have a wonderful week, and we'll talk to you later. Bye-bye now.